In this video, we're going to answer a viewer's question about problems with your current trading strategy. Stay tuned. Hey traders, a very warm welcome to you. Okay, so a viewer or subscriber messaged in and said this. I've got a question for you. I'm very good with risk management. My problem is creating the strategy itself. I'm a swing trader and I trade mid-cap equities. The problem I have is no matter what strategy I'm implementing, it seems that every time I pick a stock, it either goes against me or it just stays around my entry price. I am a trend trader entering in pullbacks. I follow daily and weekly charts, also follow the overall markets and sectors. I look for healthy companies with great metrics and ratios and growth year on year. My holding time is around 4 weeks and 2 weeks if it's not doing anything. Okay, so this is quite a common problem, guys, and thanks, appreciate the message coming in, and any others, please send them in. You know, if we can do a video about them, that's great. Always happy to do that. So this is pretty usual. First thing to say, he's a trend trader. He's a swing trader, and he's buying on, he's a pullback buyer, okay? And the problem he seems to have is that, I think it's a he actually, it could be a she. The problem they have is that they are buying, whatever they're buying is just going against them straight away, or it's not continuing on. So you kind of have to look at this, and I would always recommend literally doing this much more thoroughly than I'm doing here. Get your statements out, have a look through and see exactly what each chart is doing. The fortunate and good thing is with a swing trader is you're not going to have many trades. A day trader, it's a bit more legwork, but it's well worth doing. So get every single trade that you've done and you believe, whatever it is, you can even go for a whole year with a swing trade. There's no excuse, it's just time. Print out the chart, find out exactly what you were doing, mark on your entry point, mark on your exit point, mark, you know, write down exactly and visualize. If you need to, get a whole lounge area, living room area, office area, put them out and just see exactly what the common theme is. It will hit you like that. You will probably find that, hey, I'm buying too late. You know, if I'm a pullback buyer, I'm buying way too late. Maybe the price has already pulled back multiple times. If you're buying on this one, you're probably due a bit of unwinding, which is why you're finding very often that it's coming back on you. You're buying the pullback, but it's a little bit late. It's due a bit more of a counter trend cycle before we go on. Now, trends are nice if they do just continue straight in a straight line. And often you will get long trends, but they will, you know, kind of digest and backtrack a little bit. And if you're late when you're buying that pullback, you've got to be a little bit careful. And if you've seen in my videos about buying the first pullback, pretty more of a day trading strategy, but definitely applies to swing trading. It's always that first pullback. And there's lots of criteria that we want to look for that first impulse move to buy that first pullback. And I would suggest, I don't know your criteria, but I would suggest have a little look at the criteria for that impulse move, the filters that you use. Because just because it's moved upwards and pulling back, doesn't necessarily, for me, qualify it as a first pullback trade. That could just be pulling up. It could be a mean reversion type thing, and it does sound like you're getting caught in things that are actually mean reverting back as opposed to continuing. So analyze. This is a pure suggestion. As I say, you need to do the whole. I would recommend anyway printing out your whole chart yourself and looking at it. But I would recommend looking at that initial drive and saying, what are my filters for selecting that as a first pullback criteria trade? If it's just a movement in price, then you're going to have to add something else, because it's obvious if you're getting stopped out regularly that this isn't powerful enough to suggest that the trend will continue. Because the first pullback trade or a pullback trade is supply, demand is shifting in one direction. Obviously it's demand if we're talking about a bull market or an uptrend. It pauses for a bit, get a little bit of movement back in the other direction, and then we're looking to get just that point in time where it slams the other way again and we get that push to the highs. And if it's executed nicely, it's a beautiful, beautiful trade. Some things to point out with that first pullback trade. This is obviously for everybody, including the guy who put the question in, is, you know, you want something nice and higher and tighter the pullback, sort of the less incursion into the drive, the better. We want more volume on this drive. We want to see, you know, a good range on this drive, preferably breaking out of a key level as well. So we've got a lot of stops into air, holding above the key level. You know, these kind of things you can add as filters to give you the better quality trade. So you're not getting caught in stuff that's just pushing up and then pulling all the way back again, which it seems that you are, or maybe it's just literally stagnating. Now, stagnating is not the end of the world, because if you're taking a scratch trade or a small winner or a small loser, they're going to come out in the wash. You don't have to worry too much about those. But if you can avoid trying to pick the ones that are just coming straight back on you, that's a good start. And I would say, yes, use a stronger filter for your initial drive criteria. Okay, the other thing, what else does he say here, which is interesting? He follows daily and weekly charts. I think it just comes down to being in the wrong stock. If you're picking a stock to buy a pullback and unfortunately it's going against you straight away, it's the wrong stock. It's as simple as that. You know, you need to, and it does come down to this kind of filtering criteria. And you mentioned that you're looking for healthy companies with great metrics, ratios and growth year on year. So perhaps you've got a fundamental bias to it. So maybe use that fundamental filter that you have to scan for your stocks, and they throw up a basket of stocks for you to look at. And then if you want to buy first pullbacks, you might have to add some more strict technicals in, just like I mentioned before, something strict that says, okay, these are the stocks that qualify for my fundamental criteria that you mentioned. Now I want to see a break above resistance. I want to see it hold above resistance. I want to see reasonable volume, it pulling back, and little methods to then get on board and justify and trying to pick your stop. So if you're pulling back like this, maybe you want to draw a trend line on your daily chart and buy on the breakout of there, or something, or little things just to try and manage that risk a little bit better and to pick the right ones, because hopefully you don't want to get involved in something that's doing this, and that strategy will enable you not to get involved in that, because you won't be buying until it actually breaks out again. So yeah, add some more filters, use those fundamental filters, add some technical filters if you want to do that first pullback trade, and see how you get on. But definitely the main thing is, I would say, get all your trades, put out the charts and just see. Because you may also find, and this will digress slightly here, but we may as well do it while we're on the video, you may also find that, you're pretty good at it, you're just a bit early. That's very often the case. You might say, okay, well, I'm buying a pullback, you're holding it for kind of 2 weeks, you're closing the trade, and you're forgetting about it, and then you're going on to something else. And actually, after kind of 15, 16 days, maybe it starts to push up and go to highs again, in which case you're okay. You just need to adjust your trading plan to suit. You'd say, okay, well, actually, let me wait a little bit longer. The common theme is, that's the beauty of printing out your charts, is the common theme is, because you can see what happened before and after the trade, which is very often you don't get when you're just looking at raw data. Look at your chart and you can say, actually, we'll look at the common theme here. If I had held on a little bit longer, or if I'd have put my entry a little bit lower, my stop a little bit wider, this would have changed my results dramatically. And often it's just a little tiny tweak. I've told about my story trading the Dow when I would have a 10-tick stop against stop, 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 stops. This was day trading very actively. When I moved it to 15 and I had a little bit of extra criteria again, it just changed the game completely. I was just out of sync and trying to force my wants onto the market, and I was just out of tune with it, and I was a little bit early and I was constantly getting stopped. As soon as I adjusted that, great, then I worked on being a little bit better with my entry. So anyway, that's my kind of suggestion for you. He also requested that I do a video on how to really create a trading strategy. Definitely going to do that. Look out for that one. So if you guys aren't subscribed, hit the subscribe button. If you like this sort of video, hit the like button. As always, questions, comments in the comment section below. Great trading, keep your risk managed. See you in the next one. Goodbye.